There is a significant event that happened this past week, and that is the chairman of the Federal Reserve, Jerome Powell, made an announcement that they are lowering interest rates, 0.25, quarter of a percent. And that is a massive deal. And if you go back just a few episodes back, I told people this was coming, and I got a lot of flack for it. No, it's not. They're not going to lower interest rates. Well, they did. And it's my opinion that this isn't the last one. I think they're going to lower it a few more times. Welcome back, everyone, to the Freedom Factory podcast. Glad to have you back here with us. And I thoroughly enjoy having you here, being a part of this. I love the feedback that you guys give me throughout the week. So if you've loved previous episodes, listen, screenshot, put that up onto your stories, tag me in it, and you'll definitely see me show you the love for doing that. And let me know what topics you guys want to hear more about. Like, that would be fantastic from my listeners to give me some feedback on, whether it's more depth inside of building teams inside network marketing, more leadership development type stuff, leadership mindset stuff, or more on the financial end. Let me know. Today, we're going to be talking about the financial end. There is a significant event that happened this past week, and that is the chairman of the Federal Reserve, Jerome Powell, made an announcement that they are lowering interest rates, 0.25, quarter of a percent. And that is a massive deal. And if you go back just a few episodes back, I told people this was coming, and I got a lot of flack for it. No, it's not. They're not going to lower interest rates. Well, they did. And it's my opinion that this isn't the last one. I think they're going to lower it a few more times. I don't know, of course, how far they're going to lower it, but I think we're going to see a few more cuts in the interest rates. And so I wanted to talk to you guys today a little bit about what that means for my listeners, how to prepare for it. So, first of all, I want you guys to kind of understand how it affects things. Specifically, let's talk about investment accounts. So I've told you, many of you, to go out and make sure that your emergency fund money, you guys, that rainy day money, right? You got 6 months to 12 months of the money that you spend in an emergency account that you do not touch, right? A lot of you guys have done that, but some of you still have that money sitting in low yield savings accounts. Okay, so please get it out of those 1% accounts and move it more into the threes, the fours. You may even find some 5%. In fact, they're out there. Just go to ChatGPT and say, hey, give me a list of the top 10 highest yielding online savings accounts, and you'll get it. Now, be careful, because I did this for you guys just a few minutes ago. Be careful, because there are terms like there's one right now paying out 5%, which is absolutely incredible. But it only pays that on the first $5,000 you put in. After that, it's half of that. Okay, so if you guys have less than $5,000 in savings that you've had into this account, then maybe you might want to look at those type of accounts. Most of you will have more than that. Maybe not, though. As I'm saying it, I'm thinking there are a lot of people that are struggling, and maybe you are. Maybe you're struggling to build that emergency account, and maybe you don't have the 5,000. Maybe you're still trying to pay off credit card debt. You guys, listen. This is another podcast, but pay off the credit card debt before you build the emergency fund, because the credit card debt, if it rolls month over month, is over 20% interest. 20. Okay. There's no savings account that's going to pay 20%. So you got to pay that stuff off first. You're doing pretty well in the stock market if you're making 20% on average. Okay. But for those of you who are not carrying credit card debt beyond a month, I mean, I have thousands of dollars of credit card debt every month, but we pay it off every month. If that's what you're doing, cool, no problem. But if you're carrying that debt, make sure that is the first thing you guys go after is you pay off the credit card debt. Okay. It's critical. Once the debt's paid off, now you can build this emergency fund and just look for those higher yield accounts. Why am I saying all this? Well, when interest rates adjust, so do your interest rates in your savings accounts. So I don't want all of you to assume, oh, yeah, I'm making 3% over there, or I'm making 4% over there. Make sure now that they've adjusted, you know exactly how much money you're earning interest. Okay. Because this is how you stay on top of things, guys. This is how you get financial freedom, is staying on top of these micro moves. And you might say, oh, it's only 0.25%. Well, yeah, well, stretch that out over a year. What does that mean? You know, if it's $10,000 in savings and it's 0.25%, stretch that out. What does that mean? And then the compounding of that year over year over year can become significant. All right. So just be careful, because your bank, although the interest rates dropped 0.25%, your banks may drop it 0.5% or more. Okay. So just because it came down 0.25% doesn't mean that's what your bank did. So just check up on those guys. Okay. Now, the next thing this means is if you were in a higher interest loan, now you might have the ability to start looking at refinancing. Now, I'm not a refinancing expert. I would really take your time on just 0.25% interest because of the fees and the amount of money that you're going to pay when you refinance. Okay. You got to look at the whole picture. What's this going to cost me and how long? Like if it cost you, $5, $7, $8, $10,000 to refi, you need to think about that and how long that's going to take to pay off versus what you're saving in interest. However, if they do adjust the interest rates down a few more times, 0.5% to a full percent becomes significant savings. So just watch it. Okay. Now, there's the main reason I wanted to kind of talk to you guys about this is because this is going to affect a few things in the markets. Anytime interest rates drop, it means people are going to spend more money. That's why they do it. Like, you need to figure out the why, right? Why are they dropping interest rates? It's because people had started to spend less money. Well, why weren't they dropping it, right? So they dropped it to get people to spend more. And so now that they've dropped it, investors will also do things differently. So if you're wanting to invest in things, you want to invest in some hard assets. You want to get into things that have been performing very well over the last year or so, because there's what's called liquidity. There's some money coming into the markets. I'm not going to tell you what to invest in because I'm not an advisor, but just go do some research on when liquidity goes up in the markets. Do this in ChatGPT. When liquidity goes up, when there's more liquidity in the markets, what do people buy? What stocks do they buy? What hard assets do they buy? And then do some research around those things. Maybe come to my Monday meetup with some questions about, specific assets. And I'll do my best to answer those questions for you. If you guys don't know, just about every Monday, I do a live Zoom called the Freedom Meetup. It's at 8 p.m. Eastern. Easy to find that. We've got those links on my website, thefreedomfactory.info. Just go to freedomfactory.info. You'll see the information there. You guys should be on my newsletter. If you're not, go in there and get on the newsletter, get on that email list so I can supply you this information so that you can stay up to date and plugged in on what we're doing. Okay. The other thing this is going to do is it will affect real estate in values. Okay. So when interest rates go down, payments go down. And when payments go down, more people will purchase real estate because becomes more affordable. Now, what also happens is the value of the houses start to go up again. So start looking, pay attention. If you were someone that was wanting to get into a home, now might be the time, because we're on the edge of interest rates continuing to drop. So now might be a good time to start getting yourself prepared to take advantage of that. If you're already in a home, you may want to refinance if your rates are higher than what we're going to be going to with these adjustments. But the value of your home may go up significantly enough that you decide you want to sell. So just pay attention to the values of your home or your investment homes, because there's going to be more buyers in the market, more money coming in. When there's more buyers in the market, values will go up. Okay. Now, still right now, it's not moving nationally. Houses are not moving the way they were. So there's some deals right now. So if you were wanting to get into an investment, now might be a good time. You can get in while the values haven't gone up, and then you can ride it out for 6 months or a year, waiting for these interest rates to drop. And then you can refinance your home that you've bought. And by the way, if you buy a home, fix it, and then you refinance it in 6 months or a year, and the values have gone up, you can pull that equity out, and the equity you pull out is tax-free. So let's say you buy a $400,000 house and you put, 50 grand in or 100 grand in. Let's call it 100 grand. Now you're at $500,000 in it. Okay. But because you fixed it, the value should go up. And if interest rates come down, more houses are going to sell in the neighborhood. Those are going to go up. So you may be sitting on a piece of property that's 600 to 650, and you're in it for 500. So you refi for maybe the 600, let's call it 100 grand. And that 100 grand that you pull out is tax-free. Tax-free, guys. Think about that. And if it's an investment house, like we discussed, you've got someone paying the mortgage. So, that's what you want, right? You want to own homes that someone else pays the mortgage. So just be thinking about that. A massive way too for some tax breaks in real estate. Okay. What else could I share with you about this? This is a great time if you need to do some debt consolidation. This is a fantastic time for debt consolidation. If you've got credit card debt, this is a time where maybe you'll be able to find some banks willing to consolidate that, give you 90 days or 6 months with zero interest to be able to get, your credit on their books. So be open and looking for that. Just in these type times, guys, when interest rates are dropping, this is the time to be very educated. Just you guys, in order to have financial freedom, it's going to take time. It's going to take your study. All right. You're going to have to study maybe hours a week to get your mind wrapped around these things. And I tell people you should educate yourself enough on a topic, not so that you're the know-it-all, but so that you can ask educated questions to get to the results you're looking for. Okay. Like when it comes to wills or trust, study it enough so that you can ask the questions to the lawyers that you interview to make sure you're dealing with the right lawyer. Study investments enough so that when you're sitting down with a investment expert and advisor, so that you can ask enough questions to make sure you got the right advisor. All right. So just study, guys. Put some time in every week into finance. Figure out what bonds are. Figure out what happens to those bonds when interest rates go down, right? And how that impacts the different markets. I'm not saying that you need to become an expert in this, but you need to understand how money works. You can't live like everybody else, guys. You can't do what other people do and expect different results. And if you will do this, it puts you in a position when you're in conversations with people, put you in a position where it becomes obvious that you have some education that they don't. You have some knowledge that they don't. and it puts you in a position of influence. If you can speak on an educated level about things that other people can't, you become a little bit of an authority in that area. And people start to look at you differently. And that's what you guys want in your network marketing business. You want influence, you want to be an influencer. Well, that's the right way to become an influencer, right? Not with all the craziness we see in social media. You know, I won't even go there. Some people become influencers for all the wrong reasons. Become an influencer for the right reasons. Being someone that is educated and can add value to other people's lives by helping improve their life. That's exactly what I do. I mean, this whole podcast is about me sharing my knowledge and helping you guys make better decisions when it comes to your network marketing business and your finances. Okay. So, be aware, pay attention to what's going on in the markets. Liquidity is coming. The money is coming to the markets because the interest rates are dropping. People are going to start spending their money. If they don't spend it enough, they're going to drop rates again. And they're going to keep dropping rates until people start spending money again. Just don't spend the money on what other people are going to go to Costco and buy TVs. They're going to go buy cars. Guys, do not take on bad debt. Don't do what other people do. When interest rates come down, that is not the green light for you to go spend. That is the green light for you to invest. That is the green light for you to get your money right. Okay. Do not do when other people are spending a lot of money. That's when you should be investing. Okay. Do not do that. Do the opposite. All right. Do the opposite of what other people are doing, because that's why most people are in the position that they're in. All right. So, anyway, wanted to share that with you guys this week. Be wise to what's going on. Go educate yourself. And I hope that you take advantage of this cycle, because it won't last forever. You know, I don't know if it's going to be a 6-month cycle, 12-month, 18-month. I doubt it's going to be more than 24 months of, I say this cycle, where it's going to drop. It's not going to drop indefinitely. And so at some point we're going to reach a bottom, and then the rates are going to start to go up again. Okay. And at that point, I want you to have already maximized your decisions around this process, because we just witnessed this last time. Our very home that I'm sitting in, we were able to refinance almost at the very bottom. We waited, pulled the trigger at the right time. And obviously I'm happy that we did that. And then when the rate started to go up, no, I didn't like the fact that homes, real estate came down in value. Like the home that we live in lost a lot of value because interest rates were going up, right? But you don't really lose money unless you're buying or selling, right? We didn't sell the house, and so we didn't lose anything. It's just the cycle that we're in. So what I'm saying is, know what cycle we're in and know how to take advantage of it. Okay. The cycle we're in right now is interest rates are dropping. So people are going to spend money. Just get your money right and wait for the change when it goes back the other way. So that's all for this week, guys. Thank you for being a part of the Freedom Factory. We'll see you next week.